Today, Robinhood announces that it's buying crypto exchange Bitstamp for $200 million, while Core Scientific rejects a billion-dollar deal from AI firm CoreWeave. And Matthew Siegel of Van Eck sits down with Crypto World to discuss the SEC's decision to approve a rule change, paving the way for spot Ether ETFs. Cryptocurrencies were mixed Thursday morning, with Bitcoin inching just 0.5% lower by noon Eastern. Ether, on the other hand, was up 0.75%, while Solana fell about 1%. Okay, let's talk about the top stories. Trading app Robinhood is buying crypto exchange Bitstamp for $200 million. Now, Bitstamp has been around for more than a decade and holds registrations around the globe, meaning that the acquisition would help Robinhood expand its global footprint. Robinhood CEO Vlad Tenev said as much when he spoke about the deal on CNBC's Squawk Box just moments after the acquisition was made public.
It's really three things that got us excited. One is this is an international business and it accelerates our plans for international expansion, particularly in crypto. Second, it brings an exchange to Robinhood, and we've been thinking for a long time that the world could use a Robinhood exchange. We have a lot of ideas about how we can improve upon that. And as we talk to our market makers, we see there's a clear need for another player in the market. And then the third, institutional business. This allows Robinhood to enter a new business, serving market makers and other institutional customers.
Shares of Robinhood jumped as much as 5.5% after the announcement of the deal, which is expected to close in the first half of 2025. Next, Core Scientific just rejected a buyout from AI firm CoreWeave. The Bitcoin miner said in a press release that CoreWeave sent an unsolicited proposal on June 3rd, offering to buy all of Core Scientific's outstanding shares for about $5.75 a share, or a little bit more than $1 billion. Core said that the board partnered with independent advisors to evaluate the proposal, but felt that it undervalued the company based on its near and long-term potential. The proposal from CoreWeave came just after the two companies announced a series of 12-year contracts to provide 200 megawatts of infrastructure for CoreWeave. And for some context, this attempted acquisition points to a larger trend that JP Morgan mentioned in a report out yesterday. An analyst for the bank said that AI firms could see Bitcoin miners as attractive M&A targets thanks to their readily available power supply with cheap energy contracts. All right, focusing on Ether for our main story. Van Eck has a new price target for the native token of the Ethereum protocol. $22,000 by the end of the decade. Now, that's according to the asset manager's new research out yesterday. Of course, that would be a massive jump from current levels of around $3,800. Crypto World's Talia Kaplan sat down with Matthew Siegel, head of digital assets research at Van Eck, ahead of the report's release to discuss the ETH forecast. He also weighs in on the SEC's recent decision as it relates to spot Ether ETFs.
The SEC had a final deadline of May 23rd to make a decision on Van Eck's spot Ether ETF application. That day, the SEC approved a rule change which would pave the way for spot Ether ETFs. What was your reaction to that? I saw you put out a statement that said that the milestone anticipates more legal victories and increased investments in Bitcoin, Ethereum, and other blockchains. What else did this development signify?
It was the biggest regulatory 180 in recent SEC history. It confirmed that Ethereum is a commodity, which we think is tremendously bullish for the prospect of innovation happening on open source blockchains. So it's great news. Bitcoin and Ethereum are both up more than 60% this year. The NASDAQ is up 12%. So it's another year of top performing numbers from this asset class. And when we look at the state of the blockchain, you all talk about the quarterly earnings reports coming from corporate America. On the blockchain, we can see the P&L daily. And 2024 can be characterized by all-time highs across the board, whether it's number of addresses that are interacting on the blockchain, the number of transactions, the amount of fees that users are paying. It's all record highs. So quite positive.
What does this mean for Van Eck specifically, this development?
We were the first traditional ETF issuer to file for a Bitcoin ETF in 2017. We were also first to file for a spot Ethereum ETF. So there was a world in which being first used to mean something. You can argue that respecting the queue, as it were, is foundational to property rights. So I still hope and expect that the VanEck Ethereum ETF, if it's approved, will trade first. If not, then it'll be all issuers at the same time, and we'll see what happens.
Were you surprised by the SEC's decision to approve a rule change, or did you see it coming? I mean, many industry insiders I spoke with ahead of the decision said that they didn't think it was going to happen right now, especially given the lack of engagement by the regulator with applicants. That is until the week of the deadline for VanEck's spot Ether ETF. So did you have any correspondence with the SEC? And if so, did that correspondence take place before the week of the deadline, or did it happen the week of the deadline? What happened there, if you're able to discuss?
I was on the record as saying that I would eat my HODL hat if an Ethereum ETF trades before the US election. Very surprising. I'm working up smoothie plans right now to hopefully execute on that promise. But no, it was very surprising. I think it's a reflection of the public pressure that's been brought. The crypto super PAC is now the largest industry-specific PAC. It's larger than Donald Trump's re-election campaign PAC. So that
you're talking about Fair Shake.
Yes. So that got lawmakers' attention. And it hasn't really gotten the White House's attention yet, right? So the White House put out an executive order 2 years ago instructing all federal agencies to bring maximum pressure on this asset class, and that's been playing out for 2 years. We hope this is the beginning of a turn.
But just to break it all down, the SEC approved VanEck's 19B4 filing, along with 7 others, including BlackRock's and Fidelity's. But the SEC has yet to greenlight the ETF's S1s, which would allow for the trading of these ETFs. So what's next? What does this mean for VanEck? How long do you think that will take? And just in a nutshell, what are the next steps?
So as you observe, to list one of these ETFs, it's like a nuclear code. You need 2 keys, the 19B4 and the S1. So we'll have to wait and respond to the agency's comments, if there are any. And we're hopeful that these products can be trading in a matter of weeks, but it's really not up to us.
You're confident that the SEC will in fact approve these S1s?
Absolutely. There's no fundamental logical difference why Ether, the asset, should be treated differently than Bitcoin. And this will be the final confirmation that ETH is a commodity. And I think what we really look forward to, there's so many traditional financial market participants who are not fully aware that this is not an asset purely for speculative means, but it has real world use cases, 3,000 different apps that have collectively transmitted more than $3 trillion in value over the last year. So this is an open source app store with the potential to take significant margin away from the big tech platforms and also banking. And we look forward to educating the traditional market participants about this asset.
Do you have a new price target for ETH given all these developments in the mix?
So we did just refresh our model, and based on more constructive view around the political landscape, as well as some of these on-chain indicators where Ethereum's scaling roadmap has really ignited a boom in users transacting on the network. So we see this network generating more than $70 billion in free cash flow to token holders by 2030, and that will support a coin price of 22,000 per Ethereum by 2030. So we're at 3,800 or so now. It's a 47% odd CAGR.
And it certainly will be very interesting to see if that forecast does in fact come to fruition. But of course, this development with spot Ether ETFs comes about 5 months after spot Bitcoin ETF started trading here in the US. You're wearing the hat, HODL, that is VanEck's spot Bitcoin ETF. At last check, as of June 4th, there were more than $705 million in total net assets. Compare that to, say, BlackRock, which has more than $20 billion in net assets. It's important to note that BlackRock did in fact become the largest spot Bitcoin ETF in the US, even surpassing Grayscale. So how does your spot Bitcoin ETF compare to your competitors? What differentiates yours from the others out there?
Well, given that the SEC allowed all these products to trade on the same day, that of course gives an advantage to the largest incumbents. So there was a world in which speed used to matter and the first to file would be first to list. Maybe someday we will return to that world now that these crypto asset ETFs are normalized. So there are few ways for issuers to differentiate themselves given the starting point was the same. We did it through skin in the game. We made the largest investment off of our firm's balance sheet into our own product by a multiple of $70 million. So if this asset has a big correction, we're going to be there with skin in the game to explain why, do the research, and be there next to our clients. The second is the quality of our research. If you look at our models on these assets, I think they're the most detailed on the street. And the third is that tickers can be differentiators. So we think we have the best one with HODL.
Siegel also weighed in on